Hey, hello investors and future investors. Welcome back to the channel. My name is Tim. And on this channel, I show you how I utilize my portfolio in order to generate weekly income. For today's video, I'm going to be showing you how I employ one of these option strategies and how I consistently keep using it to grow my portfolio. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors. And for those of you visiting for the first time, welcome, future investors. For today's video, I'm going to give you a detailed walkthrough and my thought process that I utilize when I'm doing these option strategies. I'm going to show you the risk to reward for using these strategies and how it can help you to grow your portfolio. Now, the thumbnail did say this is perfect for small accounts, but if you are trading with a larger account above $10,000, you can still implement this option strategy. The reason why I make these videos is because I used to be a 9 to 5 worker and I had to find an alternative source of income just as a backup. But with this strategy, I learned it and gradually I was able to leave my 9 to 5 and start making regular income with option trading. Now, this can also work for you. Once you learn the strategies, you're now going to be able to use it in your portfolio based on your different risk tolerance and grow your portfolio like I did with mine. That being said, our stock for today is going to be the SPY or the Spider option ticker SPY. You guys know how I do on the channel. I give you a deep walkthrough so you could follow along as we progress. So let's go ahead and get started. And to get started, we're going to first need to open up the option chain. And to get that done, we're going to have to go ahead and hit Trade SPY option. And that should be located in your bottom right hand of your screen. So now we're going to go ahead and we're going to wait for the option chain to load. Now that the option chain is loading, the first step process is that we're going to make sure it says sell and put. Now, right before we continue, I'd like you guys to know, if you guys resonate with this kind of video, I am offering a one-on-one coaching session, or if you'd like to be part of our weekly income team, feel free to subscribe to our newsletter. That link is also in the description below. So now we're going to go ahead and we're going to choose our strike date. Now, the Spider ETF usually offers the daily expiration date, so you could trade multiple times with this. Not all stocks are like this, but just for the purposes of today's video, I'm going to be going with August 26th. Okay, so here we are, and now that we're set with our sell and our put, and we have chosen our preferred strike date, now we're going to go ahead and choose our strike price. Now, in order to maximize this option strategy, it is highly advisable that you choose your strike price below the current share price. As you can see here, the current share price is trading at $561. Now I'm going to go ahead, I'm going to choose a strike price below the current share price. And for that, I will be going with let's go with the 552 strike price. Now, why did I choose the 552 strike price? Well, there are a couple of reasons. One is that I have been doing this for years, so I know exactly what strike price I should choose in order to maximize my returns. You, as a beginner, here are two criteria that you could use in order to determine a strike price that's going to work for you. So, one would be your chance of profitability. As you can see up here, this column says chance of profitability. So my chance of profitability that I like to use based on my personal preference is always an 80% chance or higher. In this case, I'm going to be going with an 85% chance of profitability, which is way higher than the 80% chance. So it fits right into my criteria. The other criteria you can use is either a 1% rule or a 2% rule. Let me briefly explain this to you. In order to get to that rule, all you need to do, you multiply the share price by 99%. The reason for that is that the SPY ETF usually fluctuates either upwards or downwards within the 1 percentile. So it's pretty much a safe bet. Also, if you're more risk adverse, then you could always sink it down to a 0.5% rule or move up to a 2% rule. Now, with the 1% rule, if you employ that, it should give you around an 80% chance of profitability as well. So, always do your own due diligence and you come up with your own strategies in order to implement any strategy here. So now that we have the strike price of 552 and we have a high chance of profitability of 85%, that is going to now pay me 0.75 or $75. Each option contract is multiplied by 100 shares. So 0.75 multiplied by 100 shares should give us $75. So that is the first leg of the cash secured option strategy. So like I said, it is a two-leg strategy. So now we're going to go ahead and we're going to implement the second leg. So right before we do that, this first leg, as you can see here, is known as a cash secured put. So now to our second leg, now we're going to go ahead to buy and put. And once again, this option strategy is known as the put credit spread. So it must say put. If it doesn't say put, then you're obviously doing something wrong. So now we're going to go ahead with the exact same strike date. And now we're going to choose our buy put right below our previous sell put. Now, our previous sell put was at the strike price of 552. So what I'm going to do, I'm going to go ahead and I'm going to choose my buy put right below that. Now I will be going with the 550 strike price. And for the 550 strike price, in this case, we're buying. Now, the fact that we're buying, we have to pay something. So the payment is going to be 0.53 or $53. Once again, each option contract is multiplied by 100 shares. So now that we receive 0.75 and now we have to pay 0.53, that's going to leave us with a positive or a credit of 0.22. This 0.2 is going to represent our returns. Now, with this 0.22 or $22 in option terms, this goes directly into our buying power. The most important thing is that money right here is yours to keep no matter how this trade goes. Now, future investors, if you guys are getting any kind of value from this video, I would like to ask you guys to please like and subscribe to the video and also hit the notification bell to get an alert when I post a video. Now, let's continue. So as you can see here, the name of the strategy is the put credit spread. Now, if you guys were to do both option legs and it does not say put credit spread, feel free to go ahead and do it again. You're obviously doing something wrong. The 550 strike price I chose because of my spread risk tolerance. Now, your spread is going to be your distance between your two legs. In this case, 552 and 550. The difference between these two is going to be $2. 550 from 552. So my spread on this option is going to be $2 or $200. Once again, each option contract is multiplied by 100 shares. So in order for me to do this option strategy, I'm going to go ahead, hit continue, and I'm going to select one contract. I'm going to hit review order. So right here, we have the entirety of the trade. So we just discussed the spread. The spread is what we're going to use in order to determine our collateral. So in order for us to go ahead and do the put credit spread on a $2 white spread, we will need to leave a collateral of $200. Now, that collateral, we might either get it back or we might lose it. I'm going to explain that to you in just a second. Okay, so right before I get into the collateral, the only difference between someone with a big account and someone with a small account is the buying power. So for instance, if you are trading with an account $25,000 and above, you can always feel free to implement more than one contract. If you are trading with an account with just $500, that's why the put credit spread is going to be perfect for you. With $500, there isn't much you can do concerning the other option strategies. So let's get back into the collateral. Okay, come expiration date of August 26th, there is a couple ways this trade could go. Ideally, what you want is that at expiration date, you want the SPY to be trading at any price above 552. Once that happens, then you get to keep your initial credit. That's yours to keep no matter how the trade goes, as you mentioned before. But then now your $200 collateral is now released back to you. And now you could go ahead and do this trade for the following week or the following month based on your risk tolerance. Now, the other way this trade could go, come once again August 26th, if SPY is trading for any price below $550, then once again, you keep your minimum credit. It's yours to keep no matter how this trade goes. But now you lose your $200. But it is not all lost. The reason being, a total loss on this trade is going to be the $200 minus the premium you received. Okay, so come expiration date once again on August 26th, if SPY is trading for any price between 552 and 550, then you keep your minimum credit, but now you get part of your collateral back. So before going into any option strategy, once again, always remember to do your own due diligence. Now, what I'm going to do, I'm going to go ahead and show you guys two tricks you guys could use in order to maximize your returns and to almost secure your win for this strategy. Okay, so the number one tip you could use in order to almost guarantee you're going to win this trade is to give yourself more time. So by that, I mean you could extend your expiration date. Okay, so what most professional traders do is that in addition to extending the time, they also go ahead and choose what we call between a $5 to $10 spread. So instead of the 550, we're gonna go ahead 1, 2, 3, 4. You're gonna count 5, and then we're gonna go ahead and select the strike price right here. So now you see, because I now chose a 5 widespread, my collateral is gonna increase. But what it does is that it minimizes the risk of you getting assigned. So once again, feel free to use your risk tolerance when performing any option strategy. So for all you future investors out there, if you guys want to get started with options or you want to brush up on your already advanced knowledge, feel free to pick up a copy of my options ebook. That link will be in the description below. Also, if you need additional help with options, feel free to join our weekly income team. And if you guys have any questions about the put, credit spread, or any other option strategy, please let me know in the comments below. Now, thank you guys for watching. And as usual, always keep pushing your investment.